Thursday, January 22nd, 2026. Before we even talk about prices this morning, a major winter storm is lining up to hammer a huge stretch of farm country this weekend. Snow, ice, brutal cold, and real impacts on travel, livestock, and grain movement. We'll break that down in a minute, but first let's get grounded in where the market's closed. Good morning and welcome to Boots and Bushels, your daily look at the markets that feed America. Whether you're heading to the barn, firing up a pickup, or just pouring your first cup of coffee, thank you for spending your morning with me. Let's start with how the markets wrapped up yesterday. Corn futures drifted lower again. March corn settled at 423 3/4, down 1 cent on the day. Corn is still stuck in a tight range, with traders struggling to find a fresh bullish spark. Export demand has been steady, but not explosive, and larger U.S. supplies are still hanging over this market. Soybeans also closed lower. March beans finished at 10.55 3/4, down about 4 3/4 cents. Bean meal moved higher, settling at 291.60, up about $1.60. While soybean oil slipped slightly, the bean market continues to watch South American weather closely, especially dryness risk in parts of Brazil and Argentina later this month. Chicago wheat took another step lower. March wheat settled at 5.10 1/4, down roughly 7 3/4 cents. Wheat remains under pressure from global competition and sluggish export demand, even as winter weather threatens parts of the plains. Live cattle finished higher. February live cattle settled at 232.37, up 22 cents. The cattle market is trying to stabilize after recent volatility, with cash trade offering some underlying support. Feeder cattle also moved higher. March feeder settled at 357.67, up $1.22. Strong feeder demand and tight supplies continue to prop this market up. Lean hogs slipped lower. February hogs settled at 87.85, down 42 cents. Hogs remain choppy, with concerns about demand and heavy weights limiting rallies. Class 3 milk moved higher. February milk settled at 15.26, up 19 cents, as dairy markets try to build a floor after recent weakness. Crude oil strengthened again. WTI settled at 60.34, up 90 cents. Rising energy prices matter here. They feed into transportation costs, fertilizer prices, and biofuel economics. Now let's talk about the weather. A major winter storm system is expected to sweep across the central and eastern U.S. starting late Friday and continuing through the weekend. Meteorologists calling this one of the largest winter weather events of the season. This storm is forecast to stretch nearly 2,000 miles from the southern plains to the Midwest and into Northeast. Here's what producers need to know. Heavy snow is expected across parts of Oklahoma, Kansas, Missouri, Illinois, Indiana, Ohio, and into the Great Lakes. Some areas could see snow totals exceeding a foot. South of the heavy snow band, freezing rain and sleet are likely, creating dangerous ice accumulations. That means power outages, slick roads, and major travel disruptions. Behind the storm, dangerously cold air will spill south. Single-digit temperatures and even below zero wind chills are expected in large parts of the Midwest and plains. Livestock stress is a real concern. Cold, wind, and ice increase feed requirements, raise death loss risk, and complicate water access. Grain movement could slow. Snow and ice can disrupt trucking, rail schedules, and local deliveries, which sometimes add short-term risk premium into grain and livestock markets. And for anyone hauling feed, cattle, hogs, or milk this weekend, conditions could deteriorate fast. This storm isn't background noise, it's a legitimate operational risk event. Let's get into the ag news producers are waking up to. First, export demand is quietly improving. Recent USDA export data showed multi-week highs in soybean, corn, and wheat sales. Buyers included Mexico, Japan, and China. It's not a runaway bullish story yet, but it's helping keep a floor under these markets. Second, soybeans are seeing technical buying. Soybeans bounced earlier this week on short covering and chart support. Traders are keeping a close eye on South America, where dryness risk later this month could threaten yields in parts of Brazil and Argentina. Third, Mississippi River logistics and export flow concerns. Barge operators and grain merchandisers are raising red flags about winter weather and river conditions heading into late January. Ice buildup and rapidly falling temperatures are already slowing barge traffic in parts of the upper Mississippi and Ohio river systems. That matters because winter barge delays can tighten nearby basis levels in interior grain markets, even when futures are weak. Any prolonged disruption here could temporarily choke off export movement out of the Gulf and back grain up into country elevators. Fourth, China quietly back in the U.S. soybean market. Traders are paying attention to renewed Chinese buying interest after several weeks of lighter activity. Recent private export confirmations point to fresh U.S. soybean purchases tied to nearby shipments. This doesn't change the long-term supply picture yet, but it does help explain why soybeans are finding technical support near current levels. If that buying trend continues into February, it could shift sentiment away from the bearish supply narrative we've been stuck in. Here's what matters heading into the end of the week. Watch storm impacts on transportation and livestock. Any escalation in delivery problems could move markets fast. Watch South American weather headlines. Dryness or heat in Brazil or Argentina can still change the soybean story quickly. Watch export sales numbers. Sustained demand is the one thing that could finally break these markets out of their sideways grind. That's your Boots and Bushels for today. From the fields to your forecast, this is Boots and Bushels. We'll be back tomorrow morning with fresh prices, storm impacts, and the ag news that matters. Keep your bins full and your boots muddy. I'll be back here tomorrow morning.